Okay, this is Radio Prague, and today in the studio we have a special debate looking at convergence of the Czech economy and wages as well with the rest of the European Union, especially perhaps the Western European countries, the old European EU as it could be termed. And with me is Aleš Chmelař, the Secretary of State for European Affairs with the Czech government. He was previously the Chief Economist or the Chief Economic Affairs Specialist with the Czech government and specialised in this area of convergence as well as monetary affairs. And with me on my left is Jan Bureš, the Chief Economist with Patria Finance, one of the biggest analytical stockbroking firms in the Czech Republic, and also one of the most sought after voices, one could say, about the Czech economy. This is not a political debate. We're looking to talk about economic issues, although Czech elections are approaching fairly fast, and Mr. Chmelař is not a politician, he's a civil servant. But as Mrs. Thatcher once said, a lot of politics is about economics and a lot of economics is about politics, so it might not seem always that we're talking about economics, but hopefully we are. So we'll start today. There were some figures out from or recently in the last day or two, there were some figures out from the Czech Ministry of Finance saying that Czech per capita GDP rose last year or this year to 85% of the average in the 19 Eurozone countries from 83% last year. And it predicts that the rise will continue next year to 86%. That's better than Slovakia, Slovenia, Poland, Hungary, and actually Portugal. Mr. Chmelař, are these good figures? Is the glass half full or the glass half empty as regards Czech economic convergence with maybe Western Europe? How do you see things?
Well, in general terms, and you've quoted the numbers that look quite optimistic, and I think we should be rather happy about the development in the last 5 years, let's say. But in general terms, and if we look at the longer term of the convergence, we see that the pace at which it proceeds is not fast enough to catch up, maybe ever, with some concrete member states of the European Union, of the older member states, let's say. And in these terms, it really depends on the figures and on the exact statistics where we look. If you look at the purchase power convergence, it's much faster than, for example, the nominal one. Then we see actually that there is a disparity in terms of the level of prices, that there is something let's say, strange in the statistical terms, but also probably in real economy happening. And what we see in overall, in all, let's say, more recent member states, is that there is a certain glass ceiling that is not as visible when we compare to EU 28, but it is quite visible when we compare to EU 15, or the core of the economies actually that were members of the EU before 2004. And there I think there are good reasons for worry in terms of a long-term convergence, whether we can catch up with the current structure of the economy and with the current economic model.
We'll come back to those specific problems in a moment. I'll turn over to Mr. Bureš. And how do you see the general structure of the Czech economy and the catch-up or lack of it? Do you think there are reasons to be worried, or should the Czech population and government be happy with the way things are going?
It's difficult to say. I still have the feeling that we have rather short time series to give kind of ultimate judgment whether the convergence is going on sufficiently fast or not. I have the feeling similar to Aleš that we are rather slow, but honestly what we see is we see several periods where there is nearly no nominal convergence, I mean, especially wage convergence, and we see periods where we have rather fast wage convergence. And that's kind of, I think, typical for the Czech economy, that we converge much faster in good times, such as the years 2005, 2007. Also now, I believe, we are entering a period where we are living in kind of a good times where when Eurozone is growing rather fast and we have record low unemployment, and typically at these times, I think we are kind of catching up faster than usual. I have the feeling that we will ultimately have the chance to decide and analyze whether we were successful or not in the convergence project after 30, 40 years. It's going to be for a longer term, longer run.
This seems like a really wide time span. I mean, we're talking... Its European Union membership was in 2004. We're going back nearly 30 years since the fall of communism. And when communism fell, the Czech Republic, or Czechoslovakia as it was still then, was regarded as maybe the brightest hope for the whole area because of the fact that its economy was relatively advanced, relatively, well, industrialized, and had little debt. And even in spite of that fact, you've seen some countries that have performed relatively a lot better. Slovakia, for example, coming from a poorer initial situation, but nearly catching up to the Czech Republic. I mean, looking over that broad time frame, do you see any reasons for that? I mean, is it just the catch-up that happened from the other countries that were further behind, or did the Czech Republic make some mistakes?
Well, it's difficult to talk about concrete mistakes, but in general terms, what I think was quite obvious in 1990s was the feeling that the catch-up, the convergence will come by itself, that it was a mechanism that would actually happen automatically. In Slovakia, that there was no such a feeling. They knew that they have to work hard, and they knew that there is a need for state initiative in terms of structural development and of support of the economy. And they made, I'd say they were in a less easy position in 1990s, which motivated them actually to do more. Not just actually in their economic reforms, but also in the fact that they have acceded to the Eurozone, and they really saw the post-revolution period as a challenge. We have not seen it as a challenge. We thought that historically, from 19th century, we were in a good position to proceed, but somehow, the history has continued, or the other economies has continued to converge, and the Czech economy has been stalling. And if we look on the historical numbers, when we compare the Czech GDP per capita in purchase power, and when we compare it with 1990s, it's clear that the Czech Republic has been roughly at 60% in the beginning of the 1990s, even after the recession period, and now we are compared to EU15 at roughly 75-76%. So the convergence is very, very low. It's maybe 14 percentage points altogether if we look at it optimistically. In the Slovak case, it's over 30 percentage points. So they converged in these terms twice as quickly, and therefore they have also converged with us. But it's not just the Czech case. It's also the case of Slovenia, who was a quite developed country in 1990s, went very well through the transition, through the economic transition. And other countries actually started to converge with them. And what we see is there is a convergence in Europe to some extent, but it's a convergence within the more recent member states, within Eastern and Central Europe. And if we look at, let's say, some measures such as the standard deviation, relative standard deviation between these states, we see that there is a much quicker convergence and much bigger catch-up between the medium income countries in Central and Eastern Europe than between them and Western Europe. It means it would show a certain glass ceiling for all the economies of Central and Eastern Europe, not just for the Czech Republic. And just because Czech Republic has been quite high in 1990s, it means that it was close to the glass ceiling, and others had a space to converge through simple reforms, through investment, through very simple, let's say, proceedings such as an absorption of foreign direct investment. But at some point, it's very difficult to bridge the over 80%. There are some hopes or examples from history when we look at the Irish case, which is very special in terms of its business country model, how would I call it. But we saw that at the end of 1980s, Ireland and the Czech Republic have been basically at the same GDP per capita level. It's difficult to compare, the economies were different, but the level was quite the same. And Ireland in 15 years basically has converged with the EU average, and is now actually still, after the crisis, actually above the EU average and even EU 15 average. So there has been some opportunities, very specific ones, that the Czech Republic has not taken an advantage. And now the Czech Republic is in a bulk of other member states competing with the same tools and within the same economic model, and not being too successful in terms. It doesn't mean that the life is bad in the Czech Republic, but in relative terms, the difference is still quite high, and especially in nominal terms. If we do not look at the purchase power, the difference is really strikingly high. I mean, we often hear that the German wages are 3 times as high as the Czech ones.
We'll come to that in a while, because
but this is at the end the term of reference that actually measures the convergence to a large extent.
If I could turn to you, I mean, we talk about glass ceilings. Where do you think the main problems lie with the Czech economy? And we'll come later to the study that Mr. Chmelař led over the last year. But where do you see the main problems being? Why hasn't progress been faster and maybe deeper?
Well, there are several things on the table. It's not an easy question to answer. One of the things it's worth mentioning that looking at the countries that were pretty fast in the convergence, those were the countries that were rather smaller than the Czech economy. This is one of the important, I think, aspects as well, because obviously Baltics are much smaller countries, but also Slovenia or Slovakia are smaller, and it makes a difference. Then you can bring up Poland, but Poland, there is argument of being maybe far behind Czech Republic with the starting position. So it's kind of difficult to make these macro comparisons and to make clear conclusions. I have the feeling that for now, what's good to look at are the positive examples within Europe, the models that work, and the models that we can say now we should approach in the future. And for me, there are models rather in the Northern Europe that I admire personally and that I think could work for the Czech economy as well. For example, looking at countries such as Denmark, you see a country that is where you see, and that's important for me, where you have much higher share of the GDP going to working class, and actually much lower share going to the profits of the companies. And this is not something that is problematic for the Danish economy. That's something that's the Danish economy is ranked number 2 or 3 in terms of global competitiveness reports, and that's a result of their competitiveness. So actually, they are number 1 in several sectors, in machinery and overall industry, such as wind power, etc. So the idea behind that is that you are very good at certain sectors. You can hire the top experts and you can pay them adequately. And you just, it's not about being able to pay them adequately. You must pay them because to actually attract them.
You're creating centers of excellence. Basically.
Yeah, and therefore you had that kind of gist of the economy, and then if you have that very competitive gist of the economy, you can have high quality services attached to that, also expensive services attached to that, and that would be a nice model of economy of a Czech economy in 10 years horizon. I personally do not believe very much that we could end up in the being economy where a higher share goes to a labor force just via supporting labor unions. I think it's good to hear the labor unions definitely in the debate, but I believe what's more important is focus on educational system and on support of high value-added production based on knowledge, basically, and rather to get rid of these huge support for huge FDI inflows that we used to have here in the past. So that would be my way of thinking. looking ahead, to look rather at the models that I think work perfectly now in Europe, and to take experience from there. And I believe it's kind of difficult, to take lessons from our neighbors within Central and Eastern Europe, as there are so many differences. It's not easy to take one easy lesson from that.
Mm-hmm. If we come to a study that Mr. Chmelař led in the government a year or so ago, this looked deeply at the structure of the Czech economy, and it found quite a few problems. And one of maybe the biggest areas it highlighted was the fact that many of the best performing companies are in foreign hands. I mean, that's fine, but one of the second findings was that a lot of the profits from those companies, the basic dividends, are re-exported from the Czech Republic to their home countries. And when you look at the Czech economy, large parts, the banks, a fair slice of manufacturing and other areas are indeed in foreign hands. And your study was very detailed, but perhaps not very optimistic as far as the outlook goes. I mean, would you agree with that, or do you think that it was the foundation for some changes?
Yeah, that's to some extent this is the same image that I tried to depict a while ago. In 1990s, the Czech economy looked quite well and well in a good position actually to start the convergence. The issue was that actually it has somehow absorbed a model that served well the economies that were of a lower, that came from a lower level. And when we look, and I think the most striking finding that we did in the study was maybe not about the extent of repatriated profits. That was a commonly known fact. But when we looked at the structure of the economy of the, let's say, domestically owned economy, we saw that its volume in constant terms has not increased an inch basically since 95. The domestic economy has not grown since 95 in the Czech context, and all the growth actually that we saw from 1990s up to today was actually due to the sector that was linked directly or indirectly through the foreign direct investment, which is okay when you grow, and it was a very good thing actually for the economies coming from a low level. But at some point, the economy gets saturated for foreign direct investment, and then we didn't know what to do. Actually, there was no other space actually to grow, and that is why we are maybe touching the glass ceiling. So this is one of the implications, that we have to do something with the part that is domestically owned and that is really lagging behind. And if you look at the structure of wages as a share of the overall economic output, in general, in Central and Eastern Europe, with the exception of Slovenia, an interesting exception of Slovenia, is significantly lower than in Western Europe, if I have to oversimplify, basically by 10 percentage points. So 10 percentage points of the economic output is actually distributed towards more investment revenues than to wages or than to income of employees, including self-employed. And in this respect, there is an amount of money that is basically not consumed internally, and that does not serve the economy to grow. And this is a structural effect that can lead to the fact that we are touching this glass ceiling. In terms of optimism or pessimism, well, it depends on how you look at this. Actually, we know that we are now in a stage where we need to go, as Jan said, towards a more higher added value production. But the issue is a very complex one. We have really good researchers that are able to find, let's say, in pharmaceutical terms, a molecule, but they are not able to marketize it. And this is the fact with everything. We are good in startups, we have very good startups, but they sell actually their product on a level before it gets global, before it gets actually the added value. And they are happy to sell it for a couple of millions of euros, but then the product is marketized actually for billions of euros. And this is an effect that we see in all over Europe actually. And the case of Denmark is a very good one, because I think that the structural similarity between the Danish economy and the Czech one is a very close one. To some extent, what is Denmark to Scandinavia and the Czech Republic is to Central and Eastern Europe. We are very close to Germany, we are a middle-sized country, and I think it would be good for the Czech economy to focus on a couple of key sectors and then to link it with quality services, and then actually have a progressive economy that somehow the output of these productive sectors can share throughout the economy. but it has to do, or somehow it has to be absorbed above, not just on a level of employees and of researchers, but of companies actually that can hold somehow the value on the territory. The Danish are very good in that. They have a certain, let's say, localization patriotism in those terms. But the Czech companies are very good in thinking something, and very, very often they think that it is a good sign actually to sell it out in one moment, or actually to go to a different country. And this is a very complex structure that will not be solved by itself by better education. It will help a lot, but we will just have a better paid employees, but we will not have a sector that could strive, which are two different different pictures actually. In one you have just the employees having higher wages, but in the other one you capitalize, you actually grow on the ideas that you have. And this is something that we have to develop, actually, how the ideas can stay here to some extent and develop further. It is not just about the people, it is also about how the rest of the economy communicates with them, how the capital markets communicate, how the savings from Czech consumers are channeled towards these companies so that they can grow, not just on foreign direct investment, which is now actually the sole, almost the only actually source of big capital in the Czech Republic. And that's much more too complex than just education system, which is still important. But there are issues also with the financial sector that is that somehow does not lead to recyclation of money and capitalization within the Czech Republic.
Mm-hmm. But maybe there's a wider image as well. I mean, on manufacturing, the Czech Republic is still one of the most manufacturing-based companies, the most manufacturing-based countries in Europe. But on services, Czechs don't seem to be able to export their services across borders. And okay, services is a tricky area across Europe because selling services isn't always easy, and maybe products is. But
still better than Germans in that.
Okay, that's an interesting aspect. I mean, your study maybe highlighted this services problem, but is there? Do you think that there could be signs of progress here, or that there could be change, or?
Well, the issue is, and now we're having it also on the very table with the, for example, with the revision of the directive on posted workers, is that services is a very sensitive, or free circulation of services within the European internal market is a very sensitive topic. And to some extent it has been not completely freed, but it is quite free actually for example, in financial services where the Great Britain has made a great use of it, and they export heavily now to the Europe, which will be actually their main issue, I think, in the Brexit negotiation. And their financial services are all over Europe, and it works quite well. For the Czech Republic, we export some more basic services, mainly, for example, in transport. And there, of course, the barriers are much more visible because it is a physical service to a large extent. So in terms of export of services, we have to focus on something different than we do today, on consultation and on basically the export of ideas to a large extent, which we do not have really a tradition in, and it really takes long time to create. And what is interesting, looking at the free movement of labor, the Czech Republic is not an country of origin of mechanical workers, but of let's say of highly qualified workers. So very few people actually travel from the Czech Republic to Europe, but those are highly qualified and highly educated. And so brain drain actually concerns relatively towards the overall volume of people in free movement within Europe. It concerns the Czech Republic actually more. And if you want to work for a high quality consultation company, you would probably go to Frankfurt, to Paris, or to London rather than stay in Prague. And this is also a niche sector that we could and should develop in Prague, because that's where the know-how actually can be exported and can be somehow forged. But it's a long way run actually, the export of services, certainly.
Looking maybe towards the future, probably over the next decade or two, we're going to see a lot of changes in the economy, the European economy everywhere, services especially, transport especially. Some of those taxi drivers that delayed Mr. Chmelař today probably, sadly, won't have jobs in maybe 10 or 20 years because the cars will be automatic, trains might be automatic, aircraft maybe not. Whole sectors of the economy will be looking at automation, digitalization. Are you optimistic looking forward in this sort of scenario, or pessimistic, or do you think it won't happen as fast as some people might think?
Well, I'm rather optimistic, but it's going to be challenging. I mean, we are facing several structural issues, and new technologies are just one of those. And I agree with Aleš here also in terms of concerning services, especially. We need more competition in services, definitely in Europe. No, it's not just the Czech case, and I believe here the new technologies can bring more competition. Definitely, they are going to be one of the vehicles that is going to bring more competition. You can easily see that, for example, on the German economy, because in German economy you had a pretty fast growth in productivity, in manufacturing or in industrial sector overall, but you had a very long-term episode of lagging service sector where basically no competition was allowed after the Central and Eastern Europe joined the European Union. So it's a overall problem in Europe, also in the Czech Republic, and I would only welcome here more competition, not only among taxi drivers, but in other services area. I think everyone is finally going to benefit, but it's going to be difficult for certain professions, not only taxi drivers, but also university professors. Several professions are going to deal with this problem. Looking ahead, I believe it can be partly beneficial for the consumers, of course, but also for the sectors that are not service oriented. I mean, also manufacturing as a core of the Czech economy can benefit from cheaper and more efficient inputs for its final product. So I think that can work together. I mean, it's not only about education, as Aleš stressed. It's also about other issues. I mean, whether we are going to be highly competitive economy on a world playground, and one of the issues is definitely being able to absorb new technologies in an efficient way and to have more efficient services, and that's finally going to decide about how we evolve in the future, whether we are going to go in the way that is rather Denmark, or whether we are going the opposite way, that is going to be rather Greece, where we have of course, you have a huge protest. People obviously want higher share of labor on overall GDP, but there is not much space to get it.
Okay, with that short vision from the big corporations, we'll end that debate. Thanks very much to Mr. Bureš, Mr. Chmelař for taking part.
Thank you.
Thank you.